once we get emotional and attached to a stock, we will justify in our heads by any means necessary. When you get rid of that emotion and you detach yourself and look at the big picture, what do you see? What's up, guys? Welcome back to Broke Man Finance. My name is Adam, and in this video we are going to be talking about HCMC and the recent news that they just came out with regarding the rights offering. There's a lot of people excited about this, but I'm not so sure. I'm going to try to clear up some confusion and explain it the way I understand it, and we're going to go through that letter a little bit. So in this video, we're going to talk about some terminology so you can understand that letter better, the letter itself, and some things that I believe that letter implies. If you don't know what I'm talking about, HCMC just the other day put out a letter to shareholders saying that they were going to be doing a strategy called a rights offering, basically to try to raise capital in an effort not to dilute shares. Before we get into the letter, let's go over a couple terms so that way whenever you read this letter or any future letter regarding rights offerings, it's a little less confusing and makes a little more sense. What is a rights offering? Well, in a nutshell, a rights offering is a way a company can offer shares to their shareholders at a discounted rate. How many shares you currently own of said company or stock will determine how many shares they will allow you to buy at a discount. Now, the specific price, that specific share price that you buy at with the discount is what they call the subscription price. And this sale typically lasts from anywhere from 16 to 30 days. When you see the term oversubscription, what that means is whenever you have bought as many shares as you're allotted to, as many shares that you're able to purchase, depending on the amount of shares that you already own, let's say you max out those shares, but you would like to purchase more, and oftentimes there are going to be shares still left on the table because not every shareholder is going to participate. So an oversubscription would be whenever you can continue to buy more shares past what that allotted is based on how many are still left. And if you would like more money to buy more shares, then make sure you check out the links in the description below. I have a list of my financial tools that I use on the daily that helps me make and save money. And while you're at it, if you like this kind of video, if you like this kind of content, then we would love to have you as a subscriber. So make sure you slide back up and hit that subscribe button so you can hang out with us for a little while longer. Okay, now let's get into the letter. Now, I'm not going to bore you to death by reading the letter word by word, not the entire thing, but there are some important pieces that we need to listen to and pay attention to. If you want to read the letter, I highly suggest it. I highly suggest going and reading the S1, which is the paperwork filed to the SEC. But there are some important pieces to pay attention to in this letter, so let's take a look at that. In order to finance the expansion and protection of our intellectual property and the company's various growth initiatives, HCMC will require additional funding. In an effort to achieve this funding in a potentially non-dilutive manner to current shareholders, our board has decided to move forward with a rights offering exclusively for our shareholders. The rights offering essentially allows our shareholders the ability to purchase our common stock directly from the company at a discounted price. Sounds good thus far, and it goes on to explain that they are trying to raise $100 million. Now, this is the plan. For every 4 shares of common stock that you own, you will be entitled to purchase 1 share of common stock directly from the company at a discounted price. This right is what is referenced to as a basic right. For example, if you own 4,000 shares of HCMC, you will be able to purchase 1,000 shares additionally at that discounted rate. The purchase price will be a 25% discount to the volume-weighted average, and there is a formula in there to determine the exact amount with that 25% discount because they can't just throw a flat fee number out there with a 25% discount because of the volatility in the stock market, blah, blah, blah. If you decide not to subscribe at all, your amounts of shares will not be reduced, but, and this is the big but, you will own less of the company on a percentage basis, and this will, I repeat, will result in dilution. For people out there saying and believing that this won't dilute the shares, that's just simply not true. This is one of the biggest concerns and negatives that comes along with rights offerings is the dilution that will come along with a rights offering. Dilution occurs because a rights offering spreads a company's net profit over a wider number of shares. Thus, the company's earnings per share, or EPS, decreases as the allocated earnings result in share dilution. As far as buying these shares and where you can, there's not a lot of information out there quite yet. I'm assuming from past experience, you should be able to buy these shares through whatever brokerage is carrying HCMC. Not all brokerages do, so you should be able to buy them hopefully through there. It may be listed a little bit different. And if you look through that S1, it also shows that there's I'm going to read this, there is an option to buy straight through BROADRIDGE Corporate Issuer Solutions, but more details will be coming out on that later. They could come out and say that that's the only way to buy them. I don't know. I'm expecting this to take place 1 to 2 months from now. So as we draw closer to that purchase date, HCMC has said that they're going to be coming out with more details regarding purchasing those shares. And I actually sent an email to them regarding the same thing I wanted to be able to bring you some more information in this video, but they have yet to reach back out to me. When they do, and I've got a list of questions that I pose to them. Whenever they do reach back out to me, hopefully they do, then I will bring you that information as well. There are a lot of people online right now that are praising HCMC and saying that this is a great thing. There's people on YouTube. They're saying it's a great thing. I don't see it like that personally. I do not see this as a great thing for HCMC. If you truly believe in the company and you're wanting more shares at a discount, you're already a shareholder, fantastic. That's great. Here's an opportunity for you. But when you start kind of dissecting and looking behind the scenes a little bit, it's got me a little suspicious. Let me point out a couple things, and you make your own decisions. I'm not a financial advisor, like I mentioned. You make your own decisions, but let me explain why I'm suspicious about this entire thing. HCMC already has an enormous float, as you can see right here. This gets mentioned all the time whenever people are talking about their concerns with HCMC and that share price ever going up. The company is obviously in need of cash because they're needing $100 million. Not sure what they've done with all the cash that's been injected since all the hype, but nonetheless, they need more money. I think HCMC knew that if they would have announced more dilution of the shares in an effort to raise that capital, a lot of investors would have thrown the towel in on HCMC, because the more shares out there floating around, the less value your current shares are going to have. So they went this route to put it back on investors, and basically they said, look, we don't want to dilute the shares, so we're going to offer you some discounted shares. You can either give us money and your shares won't be diluted, or not give us money and we're going to dilute the shares. Now this next one may be one of the biggest red flags in this entire thing to me. If you read through that entire S1 like I did, which is the paperwork filed to the SEC, it reads in there that the executives have the right to buy these same discounted shares that we do, but they are opting not to, which makes absolutely no sense to me whatsoever. Peter Lynch once had a great quote. He said that CEOs and these executives will sell their shares for a number of reasons, but they only buy them when they believe that the share price is going to go up. When executives aren't buying their own shares, it makes me very suspicious. When executives aren't buying their shares at a discount, what in the hell is going on? Because that is a big red flag to me. What do you know that I don't? Why would you, as an executive of the company, the one that's running it, not want to buy shares at a discount if you really believe that that share price is going to go up? Why in the world would you not jump on that opportunity? I just don't understand the reasoning behind it. And maybe there's something I'm missing in that, why they wouldn't want to buy their own shares of the company if they really believed in the success of this thing. And if there is something that I've missed, then by all means, leave me a comment in the comment section below. This whole thing makes me believe that this lawsuit is going to last, as lawsuits do. This lawsuit is going to last for a very long time, and now they need a chunk of capital to keep on moving and grooving until something is decided with the lawsuit. Or let's say you were an executive or CEO and you knew that it wasn't looking good for that lawsuit, but you still had a lot of optimistic investors. It would be very easy to take advantage of those optimistic investors and get injected with that $100 million in cash before the lawsuit news comes out. Because once that lawsuit comes out and it's not in our favor, you're not going to have 400,000 shareholders anymore. So no, I don't think this is a good thing at all. I believe we're looking at a giant red flag. I can't help but feel like we're getting ready to give them millions of dollars. We're going to trade millions of dollars only to watch our own values drop. And usually I'm not a pessimistic person, and I don't really feel like I'm being pessimistic now. I'm usually optimistic about stuff, but I'm also a realist. And most of the time, I try not to let my emotions get into it. I try to detach and look at the big picture. And most of the time that ends up working out for me, because what happens to a lot of us, once we get emotional and attached to a stock, we will justify in our heads by any means necessary. When you get rid of that emotion and you detach yourself and look at the big picture, what do you see? And I just don't see this being a good thing for HCMC or its shareholders specifically. So I've got to be a realist and I've got to be honest. I think this is terrible news. But let me know what you guys think in the comment section below. I'd love to hear your thoughts. I hope those stocks stay green, especially HCMC. I hope you guys stay safe and everyone takes care.